big story that we are tracking today could set a precedent of sorts for India Inc. Two former CFOs and a former director of Infosys have written a letter to the board asking that it go in for a buyback to restore confidence among investors. And in the new CEO who's just taken over the company a few days ago. What is the case they're building for a buyback? Let's take a look.
Money talks, and three former senior Infy executives believe that the company should be listening closely. Infy is sitting on a cash pile of 30,000 crores, an annual operating cash flow of 12,000 crores and zero debt. Not just that, the letter points out that Infy is trading close to 16 times earnings versus TCS's 22 times, and that they believe there is the need for the board to correct the disconnect in valuation in the marketplace. And the way to do that would be through a buyback of shares to the tune of 11,200 crores at a 52-week high of 3,850 rupees a share. It remains to be seen if these arguments will persuade the management to announce the first buyback in its 33-year history. Bureau Report, Bloomberg TV India.
All right, so should Infosys go ahead with a buyback or not? I've got a power-packed house to discuss this possible move. Our team of reporters standing by. I've got Sunanda, Priya and Agam to discuss this case for a buyback, why the street is opposed to this move and the stock performance. I also have experts, both Girish Pai, Amit, Tandon, joining us to give us a sense of what the story really is and what can be, what are the implications of this. But Sunanda, let me start with you on what this letter really highlights and why this case for a buyback.
Harsha, I want to break this up into three bits and talk about, valuations, talk about the acquisition point and also the confidence in the new CEO that this letter is raising. Now, as far as valuations go, the numbers game, both the former CFOs, both Bala and Mohan are saying that Infosys at this point is trading at about, on a 3-year basis, it's trading at about 4% over the entire index, whereas TCS comparatively is trading at about 119%, the kind of returns that it has given. In terms of value, TCS is trading at a 22 times multiple compared with, say, an Infosys, which is trading at about a 16-time multiple. And both Mohan and Bala saying that they believe that there is the need for the board to really correct the disconnect in the valuation of Infosys in the marketplace. Now, on the second point of acquisitions, now do remember that Infosys, of course, hasn't made any big ticket acquisitions in the recent past. And both Bala and Mohan saying that, being very conservative as far as cash goes is not a good move as far as value for shareholders go, and they're saying that making also a large M&A is putting the company and the shareholders at risk. In fact, sources close to the authors of this letter are also saying that, there is no need really to go ahead and make any big ticket acquisition at this point. For example, Accenture does both dividend payouts and does buybacks. TCS is sitting at a much lower cash, and therefore Infosys, which is a smaller company compared to TCS, does not need to sit on this $5 billion kind of cash pile that it has at this point. Finally, as far as the question of confidence in the CEO goes, and this is an important point that they're raising, they're saying, that the company really needs to show confidence in the new management team that has come back. Both Narayan Murthy and Shibu Lal, speaking very recently, have said they have confidence in the new management team that has come in, and therefore if the new management is trying to show confidence to the market, they have to go ahead and do this buyback and say that the future growth part of the company is really in place, Harsha.
All right, that's what the former directors of Infosys have said. But what's the street saying, Priya?
Well, Harsha, absolutely. The street is convinced that the buyback is absolutely not the best option to go in at this point. In fact, if the Infosys is looking at boosting numbers at this point, there are far other ways by which Infosys could look at boosting the EPS. Now, for instance, the buyback will only boost an EPS artificially. For instance, an analysis by Anand Rathi shows that the expected EPS boost if the buyback takes place will be about 1% in FY15 and about 0% in FY16. So clearly, no real numbers actually playing out as far as the EPS implementation is concerned, but overall it's only a sentimentally positive as far as the buyback goes, as far as the EPS is concerned. And also, if you talk about the cash needed for acquisitions, the street feels that Infosys needs that kind of cash. With a new CEO coming in, it's a bad timing actually to ask for a buyback at this point, because Vishal Sikka is a man, as we know, he's behind innovation. He's going to make some acquisitions in the digital space, and he's hinted at that very categorically in the past. cuts. In fact, the market is saying that the investors are underestimating the need for Infosys to, integrate for integration costs as well as R&D post and acquisition. Also, the other point that they want to bring to the notice is the confidence in the new CEO. In fact, the market is saying that we need to wait and watch what kind of new strategy Vishal actually has in mind, and we need to give him a 12 to 18-month period before we can actually take a decision on the buyback. So clearly it's a battle between a buyback and a dividend, but the street is saying that a buyback may not be possible at this point, but a special dividend could perhaps be in store over the next few quarters.
Thanks for that, Priya. Agam, much has been said about the stock performance. What's going on? Put the journey of the stock in perspective.
Well, the way Infosys has been, reacting to a lot of this sentiment, the positive sentiment building up, we've actually seen a build-up as much as 7% over a span of just 3 days. And as a matter of fact, we've seen a good 13.5% increase over the span of 3 months. Reasons, firstly, improved sentiment because of the new CEO taking over. We've also seen the buyback talks coming into play, and that's the reason why we've seen an improved sentiment. Of course, we've also seen renewed business focus, where they will be focusing on traditional service lines plus cost initiatives which will expand margins. And finally, in terms of their business abroad, they are expected to see a higher number of global contracts. They're looking at a good pickup in Asia Pacific business, as well as a lot of penetration and scope for penetration in Europe, and that's the reason why you're seeing a lot of strength in the stock in recent times.
Thanks, Agam. All right, I'm going to take this discussion forward, joined by Amit Tandon, MD of Institutional Investor Advisory Services, Girish, Director at Claritas Research. Gentlemen, thanks so much for joining by at the studios. Amit, should Infosys buy back? Should it take the sort of proposal suggested by the former CFOs?
Look, one of the things is they're sitting on far too much cash, and one way or the other, our belief is that some of the cash needs to be returned to the shareholders. Now, whether they do it through dividend or whether they do it through buyback is something which can be discussed and debated. That's one. The second thing, which is more important, is that all these years, the question of returning money to the shareholders has never been on the agenda. It's always been that the company needs to build up a pile. It needs to have a war chest for any acquisition which they would be doing. Whether they have, and we've seen kind of about 8-10 years, there's really not been any big ticket acquisition which the company has made. So one way or the other, the company needs to say that, look, we have this on the this is on the agenda. Now, if there is an acquisition which is attractive, we will go ahead and make it. If we don't find an attractive acquisition over the next 6 or 12 or 18 months, whatever is that predefined time frame, then the money would be returned to the shareholders. Sure. You need to remember the company is spewing out cash. Other than the cash balance, they're spewing out cash, and the fact that they're debt free. So even if they were to return some money at this stage to shareholders, and there is an opportunity which presents itself, the company is in a position to fund itself going forward.
So you would say then that the buyback is a good idea?
Absolutely. Returning money to shareholders is a good idea.
Sure. But, Girish, what is the market saying? Would you have, if you were to sort of pick between a dividend and a buyback, what makes sense?
See, firstly, I think the question that needs to be asked is, would these same people have written the letter had the stock performed in line with some of the better peers, for instance? I mean, as mentioned in the program before, we've had a situation where the stock has not gone anywhere over the last 3.5 years. It's in fact destroyed value if you take inflation into account, whereas you've seen TCS double, HCL Tech triple, and Tech Mahindra even quintuple. So obviously there's angst within these ex-Infosians. My sense is there is a substantial part of the wealth locked into the Infosys stock price, which is getting reflected in the kind of letter they've written, because the stock has not performed. The question is it because of excess cash, or is it because of operational underperformance? My sense is that it is operational underperformance which has led to the stock underperformance at once. So even if you have a situation where there is consistent buyback happening, which is what they've suggested, you do a $1.8 billion buyback this year, and next year you plow back a percentage of your net profit or percentage of cash flow into buying back, it would only lead to maybe a 5 to 10% up move, uplift in the stock. The 90-95% has to be delivered by better operational outperformance. So that is one thing that the new management has to focus on. It's not so much the cash per se.
Girish, I take your point. Now, then the question arises, if this is about operational underperformance, why now? You just have a CEO come in and look at sort of charting a new roadmap for growth. Does it make sense to do a buyback for a company? Should he have the flexibility of the cash to do what he wants?
No, I think basically what the three gentlemen basically are telling the board is do look at this option. And I do agree with these three gentlemen as well as Amit. I think the buyback has to happen because I think there is way too much of cash lying on the balance sheet of Infosys. If you compare this company with the other peers in the market, especially in IT services space, you have a situation where TCS has got about $3 billion of cash equivalents and investments in debentures, for instance. Was the $16 billion revenue that they're going to deliver in fiscal 15. You have a situation where, say, Accenture is sitting on $5.5 billion of cash versus a $32 billion of revenue that they're going to generate in CY.
Sure.
14. So I doubt whether $5 billion is going to be used up, even if they go out and make an acquisition. I doubt whether this company is going to make multi-billion-dollar acquisitions anywhere in the near future.
Sure.
It's probably going to be a $500, at the max $1 billion.
Sure.
So I think the strategy should be to hold on to some amount of cash and pay out the rest.
I mean, but tell me something. I mean, isn't this the prerogative of the board or the management, whether they want to do an acquisition or not, whether they want to use the cash or not? Why not a dividend? Why a buyback?
Sure, it could be a dividend. In fact, last year we done a study of some of all the BSE 500 companies, and our belief at that time was that companies as a whole are sitting on too much cash. In fact, we've taken a view that the whole resolution for declaring dividends should be put on its head, which is the company should take approval to retain cash rather than pay out dividends. And once they have a reason for holding on to the cash, the shareholders need to approve it and take the rest back. So in that stage, that time itself, and we are talking about a year back, we said based on the cash flows and some amount of cash, the company is in a position to pay out huge amounts as dividend. At that time, it was, of course, fairly conservatively about 38 or 42 rupees a share. This year, of course, the number would be higher. So yes, as I said in the beginning, they need to be able to return cash to the shareholders. I'm at one level indifferent to whether they do it through dividend or whether they do it through a buyback.
Sure.
Of course, the company will have its preferences between the two.
Sure. I'm just going to pick up one point that this letter says, written by the former CFOs and the director. If the board believes strongly in the words of Narayan Murthy and Shibulal and in the leadership capabilities of Vishal Sikka, they should consider this proposal. How does a buyback or accepting a buyback restore confidence in the new CEO?
Look, I'm really not sure. Just to try and kind of speculate, maybe it shows the confidence that the company will be able to generate cash in future. Our own view is that given the fact he's there and it needs to be on the agenda, but if there's a new team, he's got a slightly different perspective from a different perspective from those who've run the business in the past. So maybe he has opportunities. So if he sees an opportunity, he should go ahead and take it. Otherwise, return the cash to the shareholders. But as I said before, there needs to be a predefined time frame. And it should be articulated that, look, if we don't find an acquisition, we will be returning the money sooner rather than later, rather than saying that, look, we will continue to sit on cash. And I agree with you when you say that, look, the stock performance is much more a function of the operational performance rather than, some of these giveaways which the company might try to resort to.